But if my holding time was a year, if my holding time's a year, then I would just ignore all the noise. And of course, my holding time's more than a decade. So I think there's only three things that are relevant right now. And here are the three things. The halving is coming with 100% certainty. And as far as I can see, most of the selling of Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that's coming. And then we know there's a spot Bitcoin ETF coming. And when that comes, we plug into Wall Street and the entire banking system. And then finally, we know that fair value accounting is coming. And when that happens, the objective will go away. And now you're going to introduce this as a conversation into hundreds of boardrooms. They will not move in a week. They move quarterly, but over the course of 12 quarters, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. Right? At the end of the day, corporations only hold two assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset, pari passu to a bond, then you'll see a reallocation from bonds to Bitcoin. And then in the institutional investor side, you've got all these people holding real estate, holding commodities, holding gold, holding ETFs and S&P indexes and the like. And if they start to reallocate, and they will, 1%, then 2%, then 5%, then you're going to have something that's never happened in the history of the world, which is you've got an ETF on a commodity that is scarce. Every other ETF in the world is on an asset that is not scarce. It's inflationary. You can make more buildings, you can make more real estate, you can make more gold, you can make more commodities, you can make $100 billion worth of any of those things. The underlying producers produce more of the asset to deflate or to depreciate the price. With Bitcoin, when $100 billion flows into the Bitcoin spot ETF, there won't be any ability for any producer to produce any more Bitcoin. And so you can't really compare it to the spot ETF of gold, because gold is an inflationary asset, and you can't compare it to ETFs on real estate or on bonds or on equity. You really have to say, this is the first time we ever plugged Wall Street into an asset that you cannot produce any more of. And so nobody knows what will happen, except that if you reason from first principles, you know that it's got to actually perform better than all the other asset ETFs because the underlying fundamentals are just better.
Yeah, I mean, it is the first time in history that we're going to have something.
The benefit you get by being an early adopter is you get in before it 10x's. Like what'll happen is at some point, Bitcoin will be 250,000 and it'll be really easy to buy and it'll be not scary and it'll be easy to borrow against for it. And if you went to the trouble to get the crypto exchange account and to work through those other things, you got to buy it for 10,000 or 5,000 or 15 or 20 or 30,000. Those will all look good. So I think that it's a really big breakthrough. I mean, I got a lot to say about the FASB thing too, but the point of the spot ETF is that's legitimizing for the asset class. Yes, A, that's the first check. But B, that's plugging the asset into the Wall Street systems. That means that all of these hedge fund guys can buy $100 million of it today, no questions asked. They can just go and punch the button and buy it.